Hormazd Sorabjee, editor at Autocar India, are joining in to really discuss what is the state of Motown. We also have with us Mitul Shah, VP Research at Reliance Securities, to joining in. Gentlemen, morning. I know today we are thinking boats and planes, perhaps, but Hormazd, what is the state within Motown? And does it seem like this slowdown is getting a little bit structural in nature, or would you still believe that it's cyclical at best?
Well, I think it's a combination of several factors, and taking off from what Utkarsh said, the dealers are really facing the brunt of it. From what I hear is that the manufacturers are just not relenting. They are shoving inventory down dealers' throats. Obviously, some of these are listed companies, so they want to show good figures. And, it's a quarter ending end of June, so they want to make sure that at least their sales figures are as good as possibly can be in June. So there may be some correction next month. But overall, the state of the market, we've never seen it so bad. I think overall the economic sentiment is really down. Consumption in rural areas has gone down, and I think now we've got the bogey or the specter of a bad monsoon, which is creating a lot of jitters. And I also feel that there are structural changes. I was speaking to Maruti; they don't think there is one looking at their data. But I mean, if you see today's new age car buyer, I think they've got other priorities. They want to spend their money on other things. So I think, that's something, a reality that Motown's going to have to contend with. And frankly, proper forecasting is going to be the order of the day going forward.
Hormazd, when was the last time we saw this kind of an downtick in auto sales, and what happened after that? There are two ways to look at it. Is this...
Oh, Nikunj is not wearing the mic. Okay, we'll take over there. Hormazd, but you got the question, right? I mean, just trying to stack up what transpired post-2008 to what really is the situation on ground. And more importantly, what parameters would you actually look out for to try and gauge where the yellow weeds are emerging, to try and see those signs of us actually recovering from the slowdown?
Well, I think, frankly, the only way market can recover is obviously, when there's a barren phase like this, there is a bit of pent-up demand, little bit of an accordion effect. So then when the sentiment gets better, people will start buying car because inherently there is demand. All said and done, this is still a strong market. This is still a growth market potentially. If you just look at the rate of motorization, by that itself suggests that, there's a huge potential. But I think, it's just that the overall environment and on multiple fronts, and it's not just fiscal or economic that causes issues. It's even there's so much uncertainty over regulations, uncertainty over what models will stay, won't stay. I mean, right now we're getting a lot of queries from our readers asking, should I buy a BS4 car now or wait for BS6? This has also caused a kind of a wait and watch situation in the market. So I think once regulations stabilize, which will only happen next April, I think hopefully the economic conditions also will improve. I think that's when we can see an upside. But right now, I don't see any light at the end of the tunnel.
Okay. Mitul, let's get your view in as well. I mean, if Hormazd is saying he's not seeing any light at the end of the tunnel, everyone's hoping to see some kind of a recovery by the end of the year. What's your sense? How do things stand, and how dire is the situation looking?
Yeah, we believe that next 6 months would be more tough because of the ongoing slowdown, negative sentiment, NBFC issues still continue, and dealer viability is again new issue arises in last few months. Over and above this, once this BS6 comes in and price hike will start impacting affordability, we believe that next 1 year would be also, so from current level, next 1.5 year would remain like current situation, subdued, though there would be some improvement, but overall volume will remain muted for FY20 as well as first half of FY21.
You say light at the end of the tunnel. I mean, aren't you being slightly more bearish, because it's not for the first time auto sales have gone down. It's something which happens every 2, 3, 4 years, that we go through a bad patch of 8, 6 months. You could blame it on NBFCs, you could blame it on XYZ factors, but the nature of the industry is that always bounces back. Do you think this time it could be different? And if yes, why?
Sorry, was that question for me?
I think we've got him on a terrible line. Mithul, can I throw that same question at you? If you've heard my question, would you like to respond, or you want me to ask again?
Yeah, I heard the question. I see this time the situation is slightly different than the previous slowdown. As you pointed out rightly, every 3 to 4 years we see such type of slowdown in volumes because of whatever economic reason, whether interest rate or NBFC. But this is a kind of a cyclical downturn along with the BS6 transition. So if you notice, last time BS3 to BS4 happened, but that was a positive cycle going on. So despite the price hike, we have seen MHCV industry going up. Despite GST, MHCV industry significantly up. But this time, cyclical downturn again coinciding with the transition from BS4 to BS6, wherein, as indicated by majority of the automakers, price hike would be in the range of 10% plus for most of the categories, which is again very high during the down cycle. So that's why we believe that because of the higher price hike as well as slowdown combining together, it should last for more than 1.5 year.
Okay, 1.5 years. Hormazd, in light of this, and now talking also from a company perspective, when everyone's watching keenly to see how some of those companies fare, how are the auto majors evolving their strategies at a time like this? I mean, no one's going to throw their hands in the air and just sort of say, okay, that's that. So there must be some element of, restructuring, re-looking at perhaps how they can tackle this kind of market. What are you sensing? What are the new avenues that they're looking at?
No, I completely agree with what was said earlier, that this economic cyclical downturn has coincided with the transition to BS6. And I think we can't, underestimate what a huge impact that's going to have. And frankly, I think all automakers are going to be affected. Some will be better prepared than others, but there's no one that's going to benefit or take advantage out of this. Purely because, for reasons said, the cars are going to get more expensive. CVs are going to get a lot more expensive because of the technology used. And what I see happening also is that it's going to largely kill small diesel vehicles as well, because they're just not viable to transition to BS6 because of the cost. And you'll see about 300 to 350,000 cars, a vacuum of that as diesel goes out. Most of them Maruti, they're going to be greatly impacted because they'll have no diesel portfolio after April 2020. And whatever people say that there is no substitute for diesel, that cannot be substituted one-to-one with petrol or any other, or CNG or any other fuel. So clearly, I think all these factors are going to put even more stress on the industry. From a consumer's point of view, the cost of cars is going to go up hugely. The cost of running of cars is going to also go up hugely. So I think consumers may be smart and say that, look, I'll just hang on to my BS4 car as long as possible because it's still running fine, still cheap to run. And I think, as was rightly said, I don't see any improvement for the next 1.5 years because, yes, we will have some stability after BS6 comes in. All the cars that were to go will have gone, but you'll have a new era of cars that are far more expensive to buy and actually more expensive to run as well. And that's not going to go down well with the consumer.
The time frame that both of you are referring to, and I think you're pretty much along the same lines in terms of your outlook as well. But Mithul, from an investor point of view, then what does one do, with holdings in some of the auto majors, or if one wants to look at potentially some of those names as opportunities, would you completely stay away? How would you position yourself?
See, from investor point of view, we always look at valuation also along with the business parameters. Definitely, business is going to be challenging for next 1.5 year. But from valuation point of view, many of the stocks available at all-time low valuation kind of numbers. We prefer, if we go by segment wise, that passenger vehicle should recover earliest among all the segments, because commercial vehicle price hike would be very high and cyclical downturn impacts it more. On two-wheeler space, penetration level is quite high, but in case of passenger vehicle, penetration is quite low. And as we have already noticed, that Maruti has launched the number of BS6 vehicles, and wherein the price hike is roughly in the range of 3 to 6%. So relatively, price hike for BS6 for passenger vehicle is much lower compared to other two segments. And in terms of penetration also, it is low. Last year base was not very high, similar to the MHCVs. So we believe that among all the players, Maruti is our preferred pick and will remain positive on the stock. Though near-term hurdles will continue, so we advise that buy on decline for Maruti.
All right, gentlemen, we'll leave it there. Thanks so much for joining us this morning. And case for auto continues to look a little grim there.